In today's video, I'll share the 3 levels that I'm looking at inside of the Nasdaq market. These levels are derived using Fibonacci, volatility, and some simple price action analysis. I'll take you through all 3 of these components in today's video and share the 3 levels at the end of the video for those that would like to follow along. Now let's start with a top-down approach with the weekly time frame chart first. On this right chart here, I have the QQQ ETF, and this is the weekly time frame. There's 2 things that stand out to me on the weekly time frame. The first is our overbought signal. That's this red arrow that you see on the chart, and that's the edge signal arrow confirmation. This is our overbought signal telling us that we expect the market to take a little bit of a breather here and have some sort of a pullback. Now, the extent to which we see this pullback, you can see has varied every single time we've seen these arrows. However, every time we've seen these arrows, the market has done something towards the downside here. I've circled all of the different times here. You can see pullback, a deeper fall, and a slight pullback here. So in either case, we're looking for some sort of pause in market activity and for the market to gather its breath at least a little bit before resuming this trend. It feels likely that we're long overdue for a pullback. Now with that, we also have a double top, which I'm sure you've already noticed. But the interesting thing about this double top is we made a new high before we started to see this edge signal confirmation. So for anyone that did anticipate this double top and say short near these levels with their stop on the other side of this double top, most of them should have been taken out with price making a new high. So that's the weekly time frame chart and what I think are the 2 bearish signs on the weekly time frame. Now we move on to the daily time frame chart here. And on the daily time frame, there's a few things that stand out as well. The first one is our bearish momentum cross. That's this pink dot right here, and that tells us that the 3 EMA has officially crossed below the 8 EMA. The shorter term momentum has switched to the downside. Now, as a result of that, we've already seen 1, 2, and almost 3 days of consecutive bearish activity. We've ended with some strong bearish candles as well. This one looks like it has a lot of sellers still left. And today's candle, I think, caught nearly everyone off guard. We had a strong bull bar, and this bull bar is the reason why I think it leads to a good opportunity. Right up above us, we have an open gap near 407.50. That's this level right here. And it feels likely that this gap may get filled in either tomorrow or sometime this week's activity here. However, that gap isn't all that far away from our current price action, so it's a fairly small gap and an attainable target. Now today, with our intraday activity, we breached our Volatility Box models on the QQQ ETF. These are the daily Volatility Box models. QQQ was on its aggressive models. Now that doesn't happen all that often. So typically, that's our sign to investigate a little bit further, hence this video. Now, with the QQQ ETF breaching its daily models, we still very much have our put-call ratio, which is still signaling to us that, hey, we should be in more cautious territory or even slightly bearish. The put-call ratio is still below the key threshold level. So with all of this information, we now move on to our intraday time frame chart. Now, here's what the intraday activity looked like inside of the Nasdaq. We had a strong trend day. In fact, it was so strong that we saw 0 pullbacks. In fact, the only time the market really took a pause was right here, and it wasn't really a pullback, more exactly like a pause. Market just gathering its footing before making its next leg higher. After we hit the Volatility Box clouds, you can see how we stopped making newer highs, but instead we start to do a little bit more of a chop. Now, granted, this was towards the tail end of the day, so you might just naturally have seen the buying activity subside. The trend did exhaust near the upper volatility models, which is where our reasoning comes in for expecting some sort of a reversal, at least this week, as the markets continue to gather its breath. If we take a look at some of the volatility today in tech stocks, a lot of tech stocks hit our live scanner. We had AMD, which breached its conservative Volatility Box models. We had Apple, we had Intel, we had Nvidia, we had XLK, we had IBM. We had a lot of tech stocks that hit our live scanner, all telling us that we're seeing a lot of buying activity here. But typically, after we see that level of buying activity, there needs to be a little bit of a pause. It's unlikely that we just continue to see the market keep continuing with that rally full steam ahead. It typically gathers its breath just a little bit. So with all of that information comes in this bearish bias and the reason I started looking for some bearish levels. And that brings us to the 3 levels that we have inside of the Nasdaq. All 3 of these are derived using Fibonacci retracements, where I'm comparing previous swings to try and see, well, how does the Nasdaq typically move? And what are some downside targets that we can use to expect price action to gravitate towards? Level 1 is 384.83, and that's derived using February 2023 swing. And I'll show you this on the chart in just a second. Level 2 is 375.78, and this is using December of 2022. And level 3 is 367.29, and that's using July of 2023's swing here. So let me show you all 3 of these on our Thinkorswim charts, along with the respective swings that we're using to compare this. So here I have the QQQ ETF loaded on, and you can see the 3 swings that we're comparing. Here's swing 1, which is December of 2022. Here's swing 2, which is July of 2023, or excuse me, February 2023. And this is the July 2023 swing here, which had a few mini swings in between as well, if you wanted to dissect this a little bit further. My goal is to try and keep these levels as clean as possible. And so far, what price action is telling us is the trend is still bullish. However, there's lots of reasons to start to look at this trend to exhaust. That 407.50 area gives us the natural gap fill. Today's price action hovered near our volatility box models and we closed towards the top end, which again lends to this idea of bearish activity. And we even have internals telling us that, hey, we might want to see a little bit of a trend exhaustion here and for the market to gather its breath. If I come into the Cumulative Tick Pro, we can see that today's activity also gives us our likely trend exhaustion signal. So there you have it. These are the 3 levels I'm looking at inside of the Nasdaq, but hopefully through this video, you saw where this bearish bias even comes in from. While the market's making new all-time highs, it's hard to be a little bit more bearish. However, we're being bearish off of, I think, some fairly concrete reasons, and I've outlined them in today's video. I hope you found this video helpful. Again, that weekly time frame I think will be a nice signal, especially with the edge signal, and that's what I'm using as my compass. Take care, everyone. Good luck trading, and I'll see you in our next update.